Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on Profit in Equities. In this video, we'll be talking about 9 stocks from the portfolio of Ashish Dhawan for the year 2019. Please watch this video to know more. Now the first stock on the list is Brigade Technologies Limited, which is available at Rs 38.60 and the face value for it is 10. The symbol for it is PALRADTEC. Now Brigade Technologies Limited is an India-based holding company. This is engaged in providing information technology solutions and IT services for media and entertainment. It has an online e-commerce portal and is engaged in trading online in computers, mobiles, electronic products and computer peripherals. Now, as is evident from the 1-year chart, the company has been an underperformer throughout the entire year. The company is a microcap with a market capitalization of 37.57 crores. The EPS and price to earnings ratio are not applicable here as the company did not make any profits. The book value of 80.20 translates into a price to book ratio of 0.48, which is very cheap. The company has a debt to equity of 0.1316, whereas the return on equity is minus 0.1410 since it's making losses. The company has a dividend yield of 0 as it does not make any profits, whereas the promoter holding is also a below average figure at 37.78%. An additional point, none of the promoters holding is pledged. The second stock on the list is Brigade Enterprises Limited, which is available at Rs 211.10 and the face value for it is 10. The symbol for it is BRIGADE. Now Brigade Enterprises Limited is a property development company focusing on residential, offices, retail and hospitality projects. The company operates through 3 segments, which are real estate segment, hospitality segment and leasing segment. Now again, this company has followed a similar trajectory as the previous one and it has led to a lot of wealth destruction for the holders of this stock. The company has a market cap of 2,874.25 crores, which means that the company is a borderline stock between a small cap and a mid cap. The EPS of 16.25 translates into a price to earnings ratio of 12.99, which is much more cheaper when compared with the industry PE of 22.38. The price to book ratio of 1.23 is also cheap. The concerning factor is the high debt to equity, which is at 1.9871, whereas the return on equity for this stock is 0.0945. The company has a dividend yield of 0.95%, whereas the promoter holding is just below average at 46.85%. None of the promoters holding is pledged. The third stock on the list is Greenlam Industries, which is available at Rs 833.00 and the face value for it is 5. The symbol for it is GREENLAM. Now Greenlam Industries Limited is a laminates manufacturing company. The company is engaged in the business of manufacturing laminates, decorative veneers and elite products through its factories at various locations and branches and also dealers network spread all over the country. This company has also followed a similar pattern and has been an underperformer throughout the entire year. The company has a market capitalization of 2010.56 crores, which means that the company is a small cap one. The EPS of 23.50 translates into a price to earnings ratio of 35.45, which is slightly more expensive when compared with the industry PE of 28.00. The price to book ratio of 5.62 is also on the high side. The company has a debt to equity of 0.6824, whereas the return on equity for this stock is 0.1943. The dividend yield here is 0.30, whereas the promoter holding is just above average at 54.74%. None of the promoters holding is pledged. The fourth stock on the list is IDFC Limited, which is available at Rs 38.60 and the face value for it is 10. The symbol for it is IDFC. Now IDFC Limited is a holding company. The company is a non-banking finance company which is engaged in investing business. Its segments include financing, which includes banking business, and others, which includes asset management, investment banking and institutional broking. Now this company has also been an underperformer throughout the entire year. The company has a market capitalization of 6,161.94 crores, which means that the company is a mid-cap one. The EPS of 0.82 translates into an expensive price to earnings ratio of 47.07, which is also very expensive when compared with the industry PE of 5.54. The price to book ratio of 0.63, however, is on the cheaper side. The company has a debt to equity of 9.2945, which is also high even for a non-banking finance company. The return on equity is 0.0533, whereas the dividend yield is 1.94%. Now the next stock on the list is All Cargo Logistics Limited, which is available at Rs 103.45 and the face value for it is 2. The symbol for it is ALLCARGO. Now All Cargo Logistics Limited is an India-based holding company engaged in providing integrated logistics solutions. It offers logistics services across multimodal transport operations, inland container depot, container freight station operations, contract logistic operations, and project and engineering solutions. This stock has also been an underperformer for the entire year. Now the market cap of 2,541.72 crores indicates that the company is a borderline stock between a mid cap and a small cap. The EPS of 1.26 translates into a very expensive price to earnings ratio of 82.10 when compared with the industry PE of 34.45. The price to book ratio of 1.93, however, is not that expensive. The company has a debt to equity of 0.2706, whereas the return on equity for this stock is 0.0820. The dividend yield is 1.93%, whereas the promoter holding is a strong factor for this company at 69.95%. The other positive factor is that none of the promoters' holding is pledged. The next stock on the list is the Karur Vysya Bank Limited, which is available at Rs 89.00 and the face value for it is 2. The symbol for it is KARURVYSYA. Now the Karur Vysya Bank Limited is an India-based banking company. The bank is engaged in providing banking and financial services, including commercial banking and treasury operations. The bank's business segments include treasury, corporate and wholesale banking, retail banking, and other banking operations. Now, as is evident from the one-year chart, the company has not really done much and has been choppy. However, the general trend has been that of a decline. The company has a market capitalization of 7,113.80 crores, which means that the company is a mid-cap one. The EPS of 3.15 translates into a price to earnings ratio of 28.25 when compared with the industry PE of 33.90. The price to book ratio of 1.14 is on the cheaper side. The company has a debt to equity of 0.2971, whereas the return on equity for this company is 0.0434. The dividend yield here is 0.67, whereas the promoter holding is 2.11. About 0.50% of this stake is pledged. The next stock on the list is the South Indian Bank Limited, which is available at Rs 13.10 and the face value for it is 1. The symbol for it is SOUTHBANK. Now the South Indian Bank Limited provides retail and corporate banking, para-banking activities such as debit card, third-party product distribution, in addition to treasury and foreign exchange business. The bank's segments include treasury, corporate and wholesale banking, retail banking, and other banking operations. Now, as is evident from the one-year chart, this company has also lost a lot of value for their shareholders. The market cap of the company is 2,370.68 crores, which means that this company is also another borderline stock between a small cap and a mid cap. The EPS of 1.61 translates into a cheap price to earnings ratio of 8.14 when compared with the industry PE of 33.90. The price to book ratio of 0.47 is also dirt cheap. The company also has a very good dividend yield of 3.05%, whereas the original promoters of the company don't hold any stake. Now the penultimate stock on the list is Dish TV India Limited, which is available at Rs 24.40 and the face value for it is 1. The symbol for it is DISH-TV. Now Dish TV India Limited is engaged in the business of direct-to-home and teleport services. The company's segments include DTH and teleport service and also infra support services. It's also engaged in the business of broadcasting of other satellite telecommunication activities. Now this company of late has been really decimated in the markets when problems with the Z Group began. The company is a mid-cap with a market capitalization of 4,492.74 crores. The EPS and price to earnings ratio here are not applicable as it is not really making any profits. The book value is 36.56, which translates into a price to book ratio of 0.67, which is on the cheaper side. The company has a debt to equity of 0.5135, whereas the return on equity for the latest quarter is 0.0017. The promoter holding is 60.83, however 49.91% is pledged. Now the final stock on the list is Equator Holdings Limited, which is available at Rs 124.35 and the face value for it is 10. The symbol for it is EQUITAS. Now Equator Holdings Limited is a holding company with various segments like microfinance, other finance and others. The microfinance segment consists of microfinancing. The other finance segment consists of housing finance and vehicle finance. The company also provides loans to subsidiaries and corporate guarantees for the borrowings of subsidiaries from banks and institutions. Now this company also has been a severe underperformer post demonetization. The company has a market capitalization of 4,244.16 crores, which means that the company is a mid-cap one. The EPS of 0.25 translates into a price to earnings ratio of a whopping 497.40 times. Now the fact to be remembered here is the company has just turned profitable and hence the numbers may look out of place. The price to book ratio of 2.50 is however not wildly expensive. The company has a debt to equity of 4.3420, whereas the return on equity is 0.0139. None of the original promoters hold any stake any longer. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.